We break our brain down into three components: the chimp, the professor, the computer. And this is it comes from a sports psychology book that I read with my kids, especially when my son was recovering from an injury in high school. But it resonated well with me. And anything I learn new, I think, how can I apply this to trading? This has to somehow be able to make me a better trader, I feel like, when I learn something new. And so it was very interesting because they talked about, like, and they broke it down into the specific aspects of our brain, the hippocampus, and that's the only actual part I can think of. So obviously that part wasn't what was important. As I said, just as it's really not important that I understand each part of my car and what I called it and how it functions. I understand how the engine works. I understand what I need to do to maintain the engine, right? And so, but it's interesting because we talk about the computer is the automated parts. Heuristics, they call them, rules of thumb. Our brain, we create these rules of thumb. We're processing millions of bits of information constantly. So the brain, this beautiful computer, has to work to process it all. And so it starts to create these ways to make faster judgments. When we went through a trading psychology exercise, one of the guys who won a Nobel Prize, his name is Daniel Kahneman. He wrote a book recently called Thinking Fast and Slow. And then that's the thought process is, do we, another guy, what's his name? He wrote the book Blink, Malcolm Gladwell. And that's the book, Blink. Blink is the same concept. It's actually very popular in the realm of understanding how the mind works, but how we have a tendency to either thin slice is what Malcolm Gladwell, where we just make these fast decisions. And other times we're like, we have to gather as much information as we possibly can. And we start thinking that if I gather more information, I make better decisions. It's not true. That's what these books tell us. It's not true. So we see it in trading all the time. I heard Glenn mention it the other night. He said, analysis paralysis. That's the thinking slow part, right? Thinking, if I put more indicators, and if I understand its PE ratio, and then if I understand its book to value ratio, and then if I understand if I keep doing this and I keep doing that, and then all of a sudden, what does this lead to? It leads to the person, I mentioned this the other night, who when I am coaching, they want to describe a trade for me and then say, tell me what I did wrong. And I say, okay, well, why do you assume you did something wrong? And they said, because I lost money. I said, great, I know what you did wrong. You assume that if you do everything right, you're going to make money. That's what you did wrong. That's your wrong assumption. You can do everything right and still lose money. And if you can't accept that, this is not the game for you. This is not where you want to be, right? That's why we have to understand the psychology of it. So when I sit down and I show people a trade that went right and a trade that went wrong, the trade that went right, I look like a genius. I got in perfectly. Well, why'd you do that on the other trade? I'm like, they looked the same when they started. That's the point. They looked the same. One worked. And I tried to make as much money as I could when it worked. Let your winners run. The other one didn't work. It went against me. So what did I try to do? Cut your losses short. Bam. That's what I want to start with. Okay, sorry. Let's get into it. Weekly Market Prep. My name is Scott. And I will be your host for this beginning of the week journey. Here's our disclaimers. We're not advisors. We're not brokers. We don't give advice. We don't give recommendations. This is for education and illustrative purposes only. We're here to work together. People helping people. It feels great. Here's our agenda. Market posture. I'm expecting my score to drop. Last week was a hiccup for now. Nothing was like, oh my gosh, what's happening? But I'll tell you what, if you watch shows and read things, you'll start to feel like, oh, something's happening. That's why we do this. This is our objective. So back to the professor and the chimp. The chimp is the emotional, right? They gave an interesting description of it, but they're like, our prehistoric brains, which were so vital to us to survive 20,000 years ago, 50,000 years ago, whatever, when, something was waiting to kill you all the time. Well, that chimp brain was super helpful, but now that chimp brain really, really messes with us. And we have these reactions of like, rah, and it's that's what we're trying to, then you obviously can imagine where the professor fits in. The professor is the deliberate, the mindful, the logical, the rational, the rule-based, right? So everything that in our trading plan is the professor at work. And all the work the professor does is to automate the computer so that the computer can function and automate as best as it possibly can. And the professor is constantly trying to tweak it. The professor has one other job, and that is to defend against the chimp. The chimp wants to come in and smash the keyboard. It wants to smash the screen and smash the keyboard. That's what the chimp wants to do. And it will, if we're not careful. The chimp will do that. And so the professor has to work very, very hard to make sure that we don't allow panic to come in. Controlled, measured fear, I accept that. We're not machines. There will be fear. Fear is good if it's in the right place. Hope. People are like, don't trade with hope. What are you talking about? Of course you should trade with hope. Just make sure they're in the right place. Hope your winners get bigger. Don't hope your losers come back. Those are the wrong, two different things. Fear your losses. Hope your winners will be in a good place. Okay, economic calendar, sector searching. We actually, if you missed it, last week I believe it was on Tuesday, we did a searching. We ended up on the foundations class on the second half. We veered into sectors, and we ended up searching in financials, and we ended up searching in industrials, and we definitely fleshed out our watch list more. I thought we had some great things that are actually now setting up for trades this week. So if you missed that, and this week when we go through the watch list and you look at watch list maintenance, we did some ongoing. So there may be one more sector, which would be a revisit of financials. I love the picture, Sandy. Thank you very much for the image. We need to revisit financials because it's going to be post earnings for financials now. So it's like, okay, who's coming out leading in financials? Our watch list has good ones already, but there's a few that we might be like, let's get rid of those, and we might want to replace it because anytime you get through an earnings window. Where in Discord is the watch list? Graylin, great question. I'll show you that here in a bit as well. It's in the trading resources. But as you flag me on that, I need to go in and update that document. So when we're done today, we'll have a race to see if I can update it before anyone goes in to grab the watch list, because I have not updated it with that. So thank you for that. I just marked that on my to-do list. But thank you for also helping me call out, Graylin, that everything is available for you in Discord now. So you'll find a lot in the trading resources and the downloads. Anytime you're like, I need a new trade log, great, go download a new master copy, grab it. Or if you want to start a separate trade log or trading plan or whatever it is, it's all there for you. So, okay, early week. Oh, how does it still say shopping list? I swear I changed that. Trading plan section of the week. We're moving into record keeping this week. So if you're just joining us, we'll take a look. But the record keeping function is a big part of it. And so as you join the group, I want you to be thinking to yourself, how strong would I describe my record keeping? And if you, on a scale from 1 to 10 or a 7 or an 8, then I applaud you and I welcome you with open arms to the group. You will be a strong contributor. If it's less than that, then great. You're like the rest of us. We want to do better. Welcome to the group also with open arms. And I'm going to make sure you want to jump in and start keeping records. That's so important. If we're not keeping good records, it's like driving blind. You have no feedback. You have no sense of, is this working? Is this right? Should I do this more or less? Right? It's a numbers game, and we have to have our numbers. Okay, let's get into it. Oh gosh, you've got to be kidding me. I swear. Like every time I come in on Sundays, I come in and I check my charts, check my connections. Okay. I was like, it said I had a connection problem, but it looks like I'm not. Do I have this? Is this working? Okay. I think we're okay. Connected, real time. Everything seems fine. There's my drawing tools. Let me make sure I can see what you got. I would love to have you as we're going through this. I want to know how you're seeing it. I saw that Steven posted already his market posture as a preemptive, and I love that he does that. And I would love to have people doing that, is coming in and doing your posture before, so that you're already thinking, all right, here's what I am, Scott, and I want to see what you are, and then we reconcile. If you're new, I'm not expecting that at all. You're just getting comfortable with what are you talking about, Scott, with this market posture. This is our weekly orientation to the market. We like to think of it as our be water mentality, right? Whatever the market is, we adapt to that. And this is what informs us as to how we should be adapting. Should I be taking more risk or less risk? Should I be holding trades longer or shorter? Should I be taking profits earlier or later? All of these are sliding scales. And rather than trying to make an individual decision with every trade, I want to keep an overarching posture that helps me to have these decisions just sort of like, oh, I already know what I'm doing here. We've held some trades through some hiccups where it's like, oh, it hiccuped a little bit. Well, we're going to hold on. Why? Because we're bullish. And we've been bullish. You can see here, really since late April, early May, we were kind of kicking out of a consolidation, and then by mid-May, we were back to a 5, and we've been there ever since. Okay. Well, we had a funky week. In fact, we've seen a couple of things that even though our posture hasn't dipped, we've made some adjustments. I want you to notice that. I want you to look at the last 3 trade alerts that came out and the fact that we didn't do much last week. And what happened last week? Was the market up or down? Was the worst week since, I think they didn't say it now. I had it somewhere. The worst week. Well, look at the trades that we did. We did an oil trade. We did Colgate-Palmolive, which is a consumer defensive, right? A little bit. Remember what I called those? I called them off-cycle trades. Why are we off-cycle? Because we're looking at things that might start to move outside of the market, right? And we did a calendar spread, which is a neutral trade. All 3 of those are closed. All 3 went right. Where did that information come from? It's not like, oh, look how smart we are. It's, look, our market posture helps us to see what's going on. What does it mean? We're just open to it, right? We're open to it. So, yeah, last week was kind of nasty. A little bit nasty. How did it turn? So this is the first question. How did you do? How did you do? Right? And now in conversations with those who are telling me what they're doing, I feel like we did fine. Most people had closed most of their trades, tightened stops. I know a few people had picked up some hedges that maybe they held on to. But if it went bad for you, this is the time for us to just do a little bit of a retrospective. We may not be out of it yet, but we're just getting started to say, hey, how did you hold up? Did your risk management protect you? Did the way that you see the market help you? And if not, what do you need to do, right, to improve that? Okay, so let's get to it. Long-term trend, my expectation of that score changing is absolutely 0. We've been talking about why that is. But let me take this to a 3-year weekly chart. And remember that it's this line here. This one that I just turned blue, that's the bottom line of our trend as it stands now. This is the top as it stands now. Those two lines are making what we have scored the short-term trend now, or the long-term trend. It's one red candle. Here we had 3 candles, and then it got right to the bottom. So you'll notice that in this time, we didn't make any changes here either. I'm not going to make any changes until I see maybe that it goes lower. Then what? Then I might drop it a quarter of a point. But for now, nothing. That stays the same. Okay. Now, here, we might. This is the first place where I'm like, ooh, this might, we'll see what this does. Why am I saying that? Because technically, we broke that line right there. Right? That's the line that we've been working off of. We dropped underneath that line. Okay. So, should I knock a quarter of a point off? I'm going to say that is a discretionary call right there. For me, I actually felt like I had a good answer ready, and even now I find myself wavering. Normally, I wouldn't score it on the first day below. Right? If you notice, this is the first day we're below that level. Yeah, I am going to drop it a quarter of a point. Actually, I wasn't going to because I'm like, it's one day. But as I think about it, if I look at what's going on here and I take this across, let's just assume we hold up right where we are. That's still uptrending right there, right? That's still uptrending. If this is a 0 and this is a 3, that's like a 1 right in here. This would be equal to a 1. So if that's what we're moving towards, then yeah, I wasn't going to, but I am going to let it drop a quarter of a point. Steven said he also deducted a quarter of a point. Okay. If anyone has done their scoring, let me know if you didn't, because I'll tell you what, I was actually going to say I'm not going to do it and then say, but I completely understand if you did. But right here, as I saw just this, what caught my eye was this line, which turned into this trajectory. I was like, I don't know. Maybe we are just slowing down for a minute. Not breaking. I'm not like, oh, the trend is reversing. No, slowing down, still a 1, still positive, just a little slower. What does that mean? That means that where we might have pushed to get more on the table, we might be like, okay, just relax, just, a risk management adjustment. But I'm definitely still bullish. I'm definitely still looking for a higher low. And yeah, I actually feel like that's the right decision. I'm going to drop mine a quarter of a point. So first adjustment down here. Now the volume is where I actually am concerned that it got kind of nasty quickly. And if you've listened to our conversations about volume, I actually, in a strong trending market, expect my volume score to be a 0. I don't expect it to be high. I don't expect there to be like, oh, we have big volume. Like, that's just not necessary in a bullish market. trend supersedes a volume requirement in that regard. If I have a strong trend, I don't need it. So then what would my expectations be the next time I do see volume ramping up? That tends to be around a transition, right? We see volatility pick up around market transitions. Well, transition to what? To more bullish or to a possible consolidation or correction? Yeah, a little bit concerned of that. Possibly. I'm not putting it, like, again, we just want to understand, what does it mean when we see it start to slow down a little bit? That's it. Okay. But I am concerned that we're going to see the volume decline here, and that is going to weigh on us. What's the time frame? Those of you who are new, every one of these 6 components and this process itself, we have I don't want to say documentation because it's not written. It's videos where you can just go watch and see, oh, okay, this is how I'm scoring it, why I'm scoring it the way that I do. What does it mean? What are the implications? And in fact, that's an important piece of this, because we are not dogmatic here. Meaning we don't say, like, if A plus B equals this, then we do this. It's like we want to understand the market. That's what we're doing this for. So we're not trying to, like, it has to be a certain, we're like, let's just be open to what it means. What does this mean? It's factually interesting because I actually thought that when I have a what I call a sanity check for this analysis. We'll see what it leads to. So if you look, what am I analyzing here? I'm analyzing surges in volume. These are the important days. These are the important days. I know this because they are the above average. My average is a 20-day simple. I use exponential on price. I use simple on volume. So I'm just applying a moving average to my volume panel. And now I get this green line so I can quickly see. And I have 1, 2, 3, 4, 5, 6, 7 days. This first day, that's a wash. So I'm going to give that to nobody. Now, here's the deal. This second day, I'm going to give this one to the sellers. Right? To the sellers. So I'm going to say that's a selling day right there. Now, here's what's interesting. In all of this, we didn't get a single day of volume. Not one. Then we had another selling day, and then we finally had a buying day. So those two cancel each other out. So up until this point, everything was still pretty fantastic, still going up. We only had 1 day of volume, which was back there in the back. And so I would have scored that a 0, right? I would have scored that a 0, and I would have actually given that to the buyers, a 0.25. I would have given that a 0.25. But at this point, you'll notice I have a selling day, and then I have, boom, 2, 3. 1, 2, 3. That was abrupt. Wednesday, Thursday, Friday, and it all came on big volume. So now I have 5 selling days and I have 1 buying day. Yeah. That just sort of, and you'll notice we lost a little bit of positive volume back here. Now, here's the deal. At this point, I would score that 5-1. I would score that a minus 0.5. Now, my sanity check here, we still have ever so slightly a pop, an upward slope. But here's the deal. Remember that what we said about volume is I don't want to squelch this and be like, oh, I was thinking to myself, do I limit this to just a minus 0.25 because it's still this? No. This is doing its job. This is flagging that this right here, that's concerning to us. Yeah? That's a concern. Okay. I'm going to let it go to a minus 0.5. Steven, what was yours? I know Sandy's booing me. Look, here's the deal. I prefer to be bullish. We should all prefer to be bullish. You'll always make more money in a bull market than you will any other market. That's facts. It's the best market to trade. It's part of why we do this, is so that we can recognize when we're in those markets, so that we can be like, hey, stop listening to whatever on the news is making you fearful and trade this. Versus, and I'll tell you this, we expect the news to be 2 weeks behind us. If you're reacting to whatever news you're reacting to, you're 2 weeks late. We've already talked about it. I promise you, right? The weakness that we're going to be looking for is subtle. We're trying to find, if it's easy to find, it's not worth anything. If everybody's already talking about it, it's not worth anything. If we can't provably demonstrate that what we're doing is to find just the subtlest little seismic readings way before that earthquake comes, then, that's it. So I'm going to leave that at a minus 0.5. And, that's flagging us. That's saying, hey, as much as it all of a sudden seems like everybody's on board and thinks that the Fed is going to give us the rate cut, that might be the disappointment that we're building to. Just keep that in mind. All we're doing is following an objective analysis of various readings of price and market analysis. That's it. We're really trying hard not to let opinion come in. That's a big one here. That was like, I think did I say on Friday, I thought I was going to be at least a minus 0.25 and that it could be a minus 0.5. All right. Major market. What happened to my analysis here? Okay. Anyone else want to tell me where else we're going to find a chunk of concern in our analysis? Because I know one. The surge in the Russell was good. Absolutely. That's bullish. That's not concerning. You can see it right here. Huge. Remember what we've been saying. We've been saying that we're bullish based on positions 1 and 2, NASDAQ and S&P. Our whole analysis has been about this, the race for third. Because look at this race for third. It's just like nobody's winning. And then, all of a sudden, somebody's winning. So, even on this time frame, we're seeing it. We go down to 133, not 1333. So I'm at 200 days. Those of you who are new, 200 days. What is that? It's about 9 months. Now I'm going to 133, about 6 months. Just changing the starting point. And it's more of the same. NASDAQ leading. S&P showing that watermark. Russell in third, but clearly surged ahead of the Dow. If it had been the other way around, we would have interpreted that more defensively, right? More defensively. Now we move to 66. Boom. So on 2 levels, the NASDAQ or the Russell popped. On the third, it joined it in a leading position. You'll notice it's not below the S&P like it was here. Right? Like it was here. So on 2 places, it jumped. And on the 3rd place, it jumped into a leading position. I kind of feel like, this is tough because we said, what are we looking for to move us into a full 1 position? A full 1 means the Russell also in a leading position. It convincingly took the 3rd spot on the first 2, and it moved into a leading position on the 3rd. I don't know. I kind of feel like it achieved that objective of the 1. But I'm going to make it do it for a 2nd week. I'm going to make it hold for a week before I'm convinced. Right? I'm leaning towards the 1. Did anybody take it? Just 1 crashing. Did 1 crash? Steven did go to a 1. I was on the fence. Steven might push me. That might be enough. Sandy says no. I don't know. It's strong. I mean, it technically met the definition that I gave. I feel like if we say, if you do this, you get the 1, and then we don't give it the 1, what's the incentive for small caps going forward? You know, what's the incentive for them to work hard like they've been working hard? Nope, I'm giving it to him. I'm surprised, Sandy. Sandy, you're usually the first one to convince the 1. You're the champion of the 1. It was because of you that we put the first 1 in last year for sector rotation. Is it major market? Is it that you're more of a sector rotation? Do you have some kind of a bias against major market? Like you only like sector rotation now? I gave it. Sector rotation. Let's go look. I mean, it's only a 1/4 of a point. At the end of the day, let's be honest. We're not fundamentally like, oh, if I do this versus this, it's going to change everything. That's not happening. If we over assess at one point, we'll just dial it back the next week. It's an ongoing assessment, right? We work off of the same. Assessing the market's like it's like flying a space shuttle. You know, we're all sitting at our computers in Houston. Houston, we have a problem. We're all looking at our computers. Well, the problem is that space shuttle's off track, off course 90% of the time, and yet it's getting its way there. Just ready to adjust when it needs to adjust. That's us. Okay, let's do the same thing with sectors. We've loved technology, right? We've loved technology and communication services. Those are our go-to. When the market starts getting bullish, I'm going to go there and be like, all right, are my old standbys pushing, moving? And then who else? Financials? Yeah, we would expect that. Industrials? Yes. And discretionary. Those are the big 5. When we have all 5 of those, we're going to be bullish. If we add healthcare, which we did a little bit back in February, March, then we're even more so. But right now, you're like, wait, Scott, you're not adding those, are you? No. I mean, they're below. They're ahead of these guys, which is good, but they're below the S&P, right? So they're not like in a leading position. They're leading the rest of the market to some extent. But I like what I see to start this off. Let's go to 133. Now we went from 9 months to 6 months. Still technology. Still communication services. Financials. Yes, we have those. Ooh, wait a second. We have a party crasher. Who let utilities in? They're just socially awkward utilities. We don't really want them here, to be fair. You know? I mean, I don't want to be elitist. But I would much rather industrials come or discretionary. Discretionary brings, better toys, I guess. I don't know. Let's see what happens as we move to 66 days. Okay, so this is where we look to score now. We set it up. Now we're looking to give it an assessment. Technology still leading. Still leading. Right? But we have some concerns here. Utilities shooting up faster than anything else. And comm services has come down. We don't like that. Right? So I'm not going to do anything with mine. I'm going to leave it alone. Let's go to 22 days. Now on 22 days, we have a nice surge on discretionary, which is great. We would love discretionary to join the group. We have a surge here from financials. So I think we could move strong again, and it's not bad that it's staying at a 0.5, but I do think it's staying at a 0.5. Questions, comments, concerns. What do we think now? We still, we searched discretionary. We searched industrials, and we said that we're going to run a new search on financials once they have finished going through earnings. Let's finish this up with volatility, and then we'll take a look at our watch list. This was my other concern. Let's go back to 6 months. Let's get to the VIX. Whoa. Yeah, that's concerning. And it's like this was coming down, and this had come up a little bit, and at least had done this. So we were kind of in this triangle type situation, right? And we've identified our peaks and troughs to just help us understand what's going on. And so we had these coming down, de-escalating. That's great. And right in here, we were like, are we going to get another one? No. That's a breakout right there. It broke the consolidation, and it took out this high, and it took out this high. And look where we are now. Now, does this mean, oh, wait, Scott, you said we shouldn't panic. Now should we panic? Nope. Nope. Why? Because we're still under 18. So let's remember the perspective. When we went back and looked at this, when we could see the pandemic, did you change your score on sectors out of curiosity, Stephen? When we looked at this, oh, you went to a minus 0.25, or you dropped yours by 0.25? Dropped it. Okay. I'll go back and look. I don't have time now since we need to get to the watch list, but let me go back and look at that. Okay. Even here, and this was just for one brief fraction, this is really the high, right? It opened at that day, and by the time it came down, this is not much. If this is as high as it gets, and then we settle from here, what we're seeing now looks and feels a lot like 2019, pre-pandemic, very bullish market. This is great. These conditions overall are good conditions, but they did deteriorate, right? We have to acknowledge, just like we acknowledged on our other charts, that we broke out of the consolidation line. We took out prior highs. All of that is still just simply, what does this equal? I'm going to drop my score by 0.25. That's it. That's what's going to happen. This is not catastrophic. This is not like, oh, it's so bad. I'm going to drop my score. But overall, still a bullish looking VIX. We have to keep that in mind. So my score is still going to be bullish on the VIX. Let me pull that up. Yeah, I'm going to drop it by a quarter of a point to a 1. I am now a 5. I've dropped 3/4 of a point. Is that a lot? No. No, it's not even a full. If it was a point or higher, we would be like, oh, that was kind of a lot. We didn't love that. So now what? We're still bullish, which means I'm still going to be looking for bullish trades coming out of it. I think maybe this market just got a little bit nervous and we had a little selling, but if we stabilize, opportunity's still here. Now, if we have another week of weakness, of deterioration, then our score is going to drop a second time. And then at that point, it's enough that we're like, oh, okay, right? Now we fundamentally shift how we manage risk and how we look for entries, how we manage trades. It's going to be different at that point, right? Once that happens, I no longer will take trades in an anticipatory fashion. Confirmation or not at all, right? There's different things will trigger. That's what we're trying to do, right? Remember the saying, always, the blade of grass who doesn't bow before the lawnmower gets his head cut off. Okay. Right? When we were picking the name for this group, we went back and forth. Do we want to call it the Market Watch Group or the Blades of Grass Club? Nobody knew what that meant, so we went with Market Watch Group, but it's the same thing, right? We are the blades of grass. The market will come and it will strike fast and swift. Okay, let's just be ready to duck. It's no big deal. We're not worried. I'm not worried. We have mechanisms that will trigger when things like that are happening. Right now, what do we have? Right now, we have a slight... Look, the market just had its worst week in like a year. What did our posture do? It dropped 3/4 of a point. Of course it's going to drop some. Of course it is. That's not what the question is. The question is, has anything fundamentally changed? And as of right now, the answer is still no. So do we have a little bit more concern? Yes. But am I going to be looking for bullish trades this week? Yes. Let's go take a look. Press says, it seems like there was broad reductions in all of our market watch categories except long term. I don't think we've seen that to the downside. Yes, press, you're 100% right. We saw a little bit of it around, this is where it gives us a chance. We saw a little bit of it in here right around the beginning of April, right? But we never dropped too much, right? And then prior to that, your memory is perfectly on point. It was back around like August. There was like a double dip. We dipped in July and then it kind of gave a little false read. And then right around September, you can see here, we went 2 points. September 17th, September 24th, we went 2 points, right? And if we go back and we look, thanks for calling that out, Press. I appreciate that. If we go back, September 17th, that was in here, right? That was in here that we dropped 2 points, was around this September 17th mark. Then it fell worse, then it moved a little, and then it really hit hard. And that was only a correction, 10%. We were ready. If that thing turned into a bear market, we were ready. Like we were ready to go bearish. We were ready, and then it reversed, and then we were ready the other way. We adapted within a week. We were the other way. If you can't take your posture and provably demonstrate how it functions in times of volatility, you're in trouble. And I feel comfortable with what we did and how we handled that. You can see that turned into a V, and we talked about that V right there. And our posture was ready to dip bearish, and then we said, wait, no. And then bam. By this point here, we were back in favor and bullish for this entire period of time. That whole time we were bullish, right? Yeah, press. That's a good call out. So my thought is this: if we drop another 2 points next week, yeah, woo. Then we have a different. Then we have a different set of circumstances to discuss. For now, I think we're okay, and I'm gonna go forward under that premise. Because look at this. Now, don't think about anything else. I throw this stock in front of you. What do you think? I hope you think that looks like a very bullish stock. I hope you think that last time it looked like this, it did this. And here we are again. And do we have time for a pre-earnings move? We got time for at least some of it. Yeah, so I like it. I'm looking for it. What about chips? No, not on chips. Not on AMD. So now on chips, where I would have been like, yeah, I'll take 2 of these. Now it's like maybe I would take 1. Maybe 1. There's an adaptation right there. Right? We're trading the technology sector fundamentally differently now. Amazon, I don't like it. I've now put it into consolidation. So at this point, I need this or I'm not going to trade it. If you still like it, okay, maybe. I mean, it took the 50 out. It took this low out. It's just kind of like, it didn't get all the way to here. I'll give you that. That's a difficult one, though, for me. Okay. What's next? AVGO. Same thing. Chips. Sorry. Let me get back to 6 months. Nope. Let me get 6. There we go. I'm not really feeling that one. AXP. Yes. Love it. A gapped on earnings. I'm okay with that. As long as it stabilizes into this window above the 50 and this thing's coming down, yeah, I think we have another trade setting up here. Absolutely. Absolutely on the list. Boeing, nope, not for me. Bank of America. Come on, Bank of America. Yes. Looks great. Higher high. It's flagging. It's pulling back. We're seeing that same kind of a pattern in industrials. So this is an old friend of ours. We just haven't watched it for a while. Tried to break out here. You'll notice, you might be like, oh, it broke out. Then what? It never held. And then back into this almost identical consolidation, you'll notice. These consolidations are uncanny sometimes, where you'll see that they'll break out and fall back into it. And I actually proved on this stock that if you go back, you will find this pattern at the start of this trend. So when we get this, it's not like we get one trade. We're thinking that's the start. I want the next trade and the next trade and the next trade, especially in industrials. Everyone's like, oh, the S&P's PE is too high. If you love PEs that are low, then come take a look at industrials. They all dropped. So, I mean, I don't care, but if you do, great. There you go. Sorry, I need to go take a peek at JPM beat expectations by 150% or 150 million. I don't remember what it was. It was a lot. Citi looks strong. I'd still trade Citi. Caterpillar. I would look to trade Caterpillar. I want you to notice right now our 2 strongest, like for setups, are industrials and financials. Great. We won't be surprised. Oh, look at this. What else? Carnival Cruise. That's consumer discretionary. That was our trade from last time. Signal came here. Patience. Ended up getting out up here. That did not meet its expectations. Still a good trade. We didn't get what we wanted. Part of you becoming the trader you want to become is How do you make money when stocks do something but not what you were expecting, right? That's a great representation. CMG, consolidation, right? What are we waiting for? We're waiting for a breakout, pullback. I will trade that every time. Every time. There's the oil trade. We signal came out here. Why did that signal come out? Oh, this was the exact trade in action. 1, 2, 3. See it? Now what? Well, we took it. We wrote it. We should have been moving the stop up. If anyone took that, I hope you can tell me how you did with that. But should have been getting out up in these areas for some of the trade and then moving your stop to here. That's another one. Did it make the full move that I thought? No, but it did some. And now what? Now, if it gives another trade in here, I'll try to catch one more before earnings because now I think I have the possibility for a trend. Great. Costco, thinking about it. Thinking about it. CSX, loving it. That's another one out of where? Industrials. Carvana, where? Consumer discretionary. Yeah? Higher high, higher low. Trend. Ford. Yeah, we got to wait. Got to wait on Ford, but Ford's got some momentum. Fastenal, another old friend of ours. I hope you see that this pattern is pretty prevalent in all of industrials. Those are growth type breakouts right there. FCX, stay away from copper. But gold is okay still. I'm not sure what these guys were. I was going to look into them and I forgot to, but I was like, I like the pattern. Maybe. Gold still looks bullish. New high, higher low. General Motors, a little more stable than Ford, but got earnings walking up on us. Google. Okay. If it holds the 50, I'll like it. The problem is earnings are on Tuesday after market. Home Depot. I did not get the trimmer yet. Oh, I told everyone I was going to get the trimmer. I haven't. Maybe today. Maybe today. IWM looks very bullish, right? People are dying to get into small caps. What does that mean to us? That means that the appetite for risk is increasing. And that's bullish. KBH, bullish. Pulling back. KO, right? You can see. Yeah, there's some concerns in chips and some tech areas. But technology and tech started what is now moving on its own. Financials, consumer, discretionary, industrials, they don't need financials right now. Now those can coast while financials and chips figure their stuff out, right? So yeah, Meta is now in consolidation mode. I would not trade Meta. Google I would. Meta I would not. Meta has to do the pattern. MFC. Yes, if it can hold. MMM. Morgan Stanley. Yes, if it can hold. So you can see financials look good. I don't know. That's a no for me now, right? I just don't see it. It's too far. So yeah, are we hesitating in technology and shifting our focus more towards financials, industrials, and consumer discretionary? Yeah, we are. And I still might look for something just like when financials were a little low and we're like, hey, we should probably actually look to get in those. And then they pushed. I'm going to have that same thought process with technology. So be mindful of that. Micron, no. Netflix, no. NVIDIA, maybe. Palantir, maybe. I still like Palantir. Here's the Qs holding above the 50. Here's the SPY. Still looks bullish. just a little bit of a deterioration. TJX, consumer, looks great, but not ready quite yet. TSM, yeah, you can see why we're hesitating, right? Here is the dollar. The dollar is pushing a little bit, but hey, as long as we can stay below this level, I'm going to be okay. So we'll see what happens. The dollar, not concerning the VIX is. I am concerned. I'd like to see the VIX. Now what we see from the VIX. When the VIX pulls back to here and turns, that's a higher low. No matter where it is, that's a higher low. We might see it get a pretty heavy drop back. And if I get a higher low, I am going to hedge that. Because at any given time, I'm concerned about this. Right? And you can see the same kind of thing. Spiked up, pulled back, and then what? Then the big one came. So yeah, I'm worried about that. At any time, I'm worried about that. But what I'm hopeful of is that it turns around, because that lower high right there, that would kick us into our next bullish window of trading, and we will take advantage of it. I promise you that. Okay, Walmart looks pretty good if you're in it. It's just steady Eddie. Real quickly through the sectors. Materials looks a little bullish. Communication services giving back a little bit. Okay. Energy. Yeah, I'm probably going to take the next energy trade too. Financials. I'm going to take that next trade. Industrials. I'm going to take that next trade. Technology. I'm giving that a little bit of space. Staples, I like discretionary better. Utilities, you guys know. We're just trying to get them out of the party. We're telling them, hey, everyone's going outside in the backyard. And as soon as they go out, we shut the door, lock it. No, I never actually did that to somebody in high school. Of course I would never do that. XLV, healthcare. Healthcare looks like it has something. I struggle to trade healthcare. But it's funny because even in our group here, people have talked about good trades they made in healthcare when they saw the momentum. I'm not a healthcare fan like utilities, but if you're thinking about it, I can see why. Yeah. Financials. Is the change we're seeing due to interest rate expectations? Yes, in regards to cap, meaning small cap versus large cap, but not so much. I mean, home builders, yes, but the sector rotation is a little bit less to do with that, actually. So we want to see that. Press gave look at Press. What a great answer, Press. We gave the same answer. Yeah. The technology is more concern of like out of China with like chip trade and things like that. So I think that's a little bit of a different story. Watch list looks strong. Looking for trades this week. I would expect windows to come starting Tuesday. Monday, we're going to have to kind of be like, okay, what happens? Let's assess it. Let's see. Do we get a sell day, buy day, doji day? But I would think if we're going to get windows, it's Tuesday through Thursday. We have trades ready to go. So questions, comments, or concerns? Last thing we're doing now, just so that you have a good sense. We are working on our trading plans. So make sure that you come in. Let me show you quickly here. I'm in Trading Resources. In Trading Resources, you can go to the content library or our YouTube channel. And you can find information about our videos, educational videos about like the market posture and things like that. Our historical market posture is in here. If you want to download, this is the major market analysis link. This is the sector rotation link. This is to build a bullish search. This is the economic calendar. This is the Fed watch. This is the heat map. And if you go into downloads here, you have a blank copy of the trading plan, the posture log. Here's our stock log. Here's the option log, top 10 trading mistakes. Here gets you a doc for the historical market posture, so you can copy and paste that and then keep yours up to date with ours. And here is the group watch list. I will go in here as soon as we're done, and I will update this so that when you come in, it will have the entire list as it stands now. So give me 10 minutes. That'll be updated. We are working on logs. Section 6 is about making sure your log is up to date. Section 7 is about having the analytics to read and analyze what's happening. We will actually be talking about logs and analytics in our Tuesday, Thursday sessions. So make sure that you're ready for that. All right, everybody, it's great to see you. I hope you have a great rest of your Sunday. We are going to be meeting tomorrow morning for the market open. Make sure you join us for that, because now we'll be able to see, are there trades developing? I don't expect an alert on Monday, possibly, but definitely coming Tuesday. I would think they're coming. Thanks, everybody. Great rest of your Sunday. As always, happy trading.